Today's number, 500,000. That is roughly how many dollars Alex Honnold was reportedly paid to free climb a 1,600-foot tower in Taiwan last week. On a risk-adjusted basis, that makes it the lowest ROI decision in history. Welcome to Prof G Markets. I'm Ed Elson. It is January 27th. Let's check in on yesterday's market vitals. Major indices rose heading into a key earnings week. Treasury yields declined, the dollar tumbled, and finally silver gained the most since the financial crisis, and gold breached a new milestone. More on that in a minute. Okay, what's happening? Stocks carried their rally into the new week following President Trump's Greenland taco, but global tensions are still gripping markets. President Trump threatened Canada with a 100% tariff over a potential trade deal with China on Saturday. Meanwhile, the dollar sank to its lowest level since 2022. That slide came amid fears of a government shutdown and talk of US intervention to stabilize the Japanese yen. And of course, the metals rally rages on. The price of gold just hit $5,000 per ounce for the first time ever. Joining us to break down what is moving markets right now, a lot in there. We're speaking with Robert Armstrong. Rob is the author of the Unhedged newsletter and co-host of the Unhedged podcast. You all know him. He's a regular at this point. Rob, thanks for joining us.
Nice to be back.
A lot we want to get into here. I think I would love to start with your reactions to last week's taco. It feels like years ago because so much has happened in the past several days. Not really markets news, but we can just set that aside for now. Let's just focus on the taco. We want to get your reaction because, as I remind everyone, you invented the term taco. We're now seeing another taco, this time with Greenland. He decided to pull those Europe tariffs after, I don't know if nuclear is the right word, but people were pretty riled up about what was happening with Greenland. What do you make of last week's taco? What does it tell us going forward?
Well, the first thing I would note is that the markets didn't move very much on this crazy plan of Trump's, this crazy saber rattling on Greenland. So, the S&P was down a couple of percent. The dollar was 1% weaker, or maybe a little more. So he didn't seem like he was scared off by markets exactly. So, and that's kind of a theme, that the markets' reaction function to crazy Trump stuff does seem to be getting blunted over time. But maybe, it's the politics. He just realized at some point that he was holding a losing hand against Europe, and he folded. I mean, I think, and maybe we ought to be glad. This is a guy who cuts his losses when he realizes the other team isn't going to just shrivel.
He also threatened these tariffs on Canada if they go ahead with this China deal. My instinct here is we'll probably see a taco again. I mean, I'm just trying to figure out if there's any rubric or formula that you can follow as an investor or even as just a market observer when Trump comes out and makes these statements about tariffs. Like, do you just not believe them, or are there certain situations where you do believe them?
I think in this case with the Canada tariffs, you can be pretty confident not believing them, that they're going to end up anywhere near 100%. Trump has shown no appetite for outright trade embargoes, which is what a 100% tariff amounts to. If we cut off all trade with Canada, there would be howls of pain in the U.S. economy as well as the Canadian economy, and it would just be more than the president could take. So I would 100% bet on a taco in this case. There's just no way. It's not practicable. It was just an expression of rage, I think, not a policy proposal.
I've had a thought recently after last week's taco. I wonder if investors would be better off never, ever listening to anything that he says. I would love to put that question forward to you. Like, there's an argument to be made that if you just turn it off, you just press the mute button, you might perhaps make better investment decisions, or at the very least, just don't really take anything that he says that seriously. I mean, this is a delicate game to play because he's the president and, he does have a lot of power. But I do wonder if that would be the case. I guess I wonder what you make of it.
I think you'd have to be careful to distinguish the cases where it's straight out of the Truth Social account and the cases where there's more voices echoing the policy, right? So, because of course, there have been highly market relevant Trump policies, the tax cuts, whatever. But I wonder if just pretending he didn't have a Truth Social account, limiting your intake that way, I think that might work pretty well. But again, there's another question, which is how much does this guy change over time? I think I wonder if as his term wears on, second term, lame duck president, 79 going on 80, whatever, you have to take seriously the possibility that his risk appetite, his just sheer bloody mindedness is becoming more extreme over time.
Right.
And we saw that in the case of Venezuela, I mean, so I don't know, turn it off, but clearly a more cautious attitude is warranted. Yeah, I mean, a more,
Yes.
I should say, not the opposite of cautious, a more skeptical attitude
Skeptical. Yes.
is warranted here.
Yes, there should be some filter between what is a Truth Social post and what is a policy proposal. The line is it's very blurry. It's not totally clear. But I think you're right. I think there probably is a line. And if someone could figure out exactly what that line is, maybe it's when Scott Bessent says something. I doubt it. Maybe when a plurality of officials get together and agree that this is the plan. Again, I'm not sure about that either. But it does seem very relevant if we're trying to parse out what is taco and what isn't. I guess taco versus FAFO, as you've pointed out before. I do want to get your reactions to what's happening with the price of gold right now. Gold has now surpassed $5,000. It's up more than 50% over the past 6 months. It is coinciding with murmurs of a Sell America trade coming back. Perhaps those are related, perhaps they aren't. But yeah, I'd like to get your views. I mean, gold has had this unbelievable year. They keep on setting these price targets, or at least I keep on seeing these price targets that seem absurd. And then it just keeps on hitting them. What do you make of what's happened with gold over the past few weeks and the past few months?
First of all, I should note for the benefit of your listeners that the Association of Financial Pundits and Forecasters ought to erect a monument to how wrong I have been about gold for the last couple of years. I mean, I was a skeptic at $2,500, right? 100% ago. So I don't like it as an asset class. I don't think it's been great over time. I've articulated again and again my skepticism, and I have been wrong as it is literally possible to be. So with that said, that's your health warning to everyone listening to me. I think that there are two theories here. One is that, and they can both be true. One, well, actually, three theories. One, what this shows you is about the debasement trade, right? That the dollar and is going to weaken over time, and there's going to be inflation, et cetera, et cetera. U.S. assets in particular and paper assets in general, that's bad for them. There's another theory that gold always goes up on political instability. It's not so much the inflation stuff, it's the politics. Third theory is that it's a meme stock now, and people are just piling in. All three of these can be true to different degrees. I don't like the debasement theory because we just don't see it in the bond market. People love to huff and puff about how the dollar is so weak now, but if you look at a 10-year chart, it's sort of average. Inflation expectations, however you measure them, any market-based measure of inflation expectations, 100% fine. So how could you have massive debasement that gold is picking up on and the bond market just doesn't see it at all? That strikes me as crazy. That leaves us with, then we go to the politics. Yeah, the world does seem a bit insecure right now. But again, why wouldn't that express itself in sovereign bond yields somewhere? Same argument. That leaves us with meme stock, which has been my favored theory. It's like people are chasing the momentum, but the longer you're wrong, the more you start to doubt yourself. And so you've caught me at a moment of self-doubt, and I'm actually writing today, trying to look again at the politics theory, the debasement theory, and see what can be salvaged there.
Yes, it is very interesting. It's like gold has turned out to be everything that Bitcoin wanted to be, and it's remarkable how Bitcoin has not performed. I mean, it's just, while they have the Bitcoin president in office, while the world appears to be going politically to shit in various ways, this is Bitcoin's year, but it isn't. It's gold's year instead.
There is a theory, by the way. I mean, I think there are people out there saying that crypto people are realizing that crypto is actually correlated to the stock market. So it's not a hedge against your other assets. And so they're switching to gold, right? They're like, there's no diversification benefit to crypto. It's just an amplifier of the returns on the rest of my portfolio. But I can't find anyone who says they see that happening, that they see out of crypto and into gold trades. So
yes, I would love for someone to come forward if that is really happening.
Yeah,
you will lose all of your pride and reputation having loudly talked about why crypto is exactly the investment for this situation. But still, it would be very good for us, or at least for me as a crypto skeptic. Final thing I'd like to get your reaction to. We are the contenders for the Fed chair has been an ongoing race. Last week, I learned on Kalshi, actually, on one of these prediction markets, that there is a new contender. This guy, Rick Reeder, his chances have soared to nearly 50% after Trump had a call with him. He called him very impressive. They had a meeting at the Oval Office. He is very much in favor of cutting rates. He is a former BlackRock executive. He's expressed concerns about the labor market, etc. I haven't looked into him very much yet, but any reactions or thoughts on the possibility of not Kevin Hassett, not Kevin Walsh, but Rick Reeder as Fed chair?
I've spoken him to a lot. I've interviewed him for the newsletter. He's an extremely clever man with a very deep knowledge of markets. I mean, he's arguably the most important bond trader in the world, given the sheer amount of assets he manages at BlackRock. So he knows the market as well as anyone you can possibly imagine. And I think he's a very smart guy. Does that mean he has the temperament to be the chair of the Fed, or that Trump will pick him? I have no idea. It is important to note, however, that on several occasions, quite consistently, Reeder has said he doesn't think rates at, call them 5% now or whatever they are, or when rates are at 5%, now the base rate is a little lower, whatever. He's consistently said, actually, I don't think these highish rates are doing very much to control inflation. And in that context, he's used the example in the past of the housing market, right? Where if you brought the cost of mortgages down, houses would get cheaper. So that would actually be anti-inflationary. So he says these kinds of things, you can understand why the president would be interested in at least talking to him. He has also said on at least one occasion that maybe the Fed should, or suggest, I emphasize the word suggest here. He suggested that maybe the Fed should help the Treasury control interest costs. Maybe he was misconstrued. That is a left fieldy idea. I'm not sure if he really meant that or whatever, but it's out there. So I think he is a guy who might naturally appeal to the president. I mean, it's clear what the president is afraid of, right? Which is that he'll appoint somebody who will give him a lot of sweet talk in the appointment process and then turn out to be his own person or her own person, which is, of course, the whole point of the structure of the Fed chair's job. And my sense of Rick Reeder is that he's a market vet who's going to have his own views. And I wonder if Trump might not get that sense from him too and back off. He's a really serious person. Rick Reeder is not a toady.
Yeah.
He's just not.
Which is, it's very interesting because it's hard to see the right fit for the job as anyone but a toady and a sycophant. I mean, it
I
appears
agree.
that the best person would not be a seasoned Wall Street executive. It seems like the best person would just be a guy who doesn't have many thoughts and just is willing to say yes and bring things down.
With
I
a
mean,
small number of exceptions, Trump has appointed for loyalty rather than competence.
yes.
You could argue in the case of Rubio or possibly Bessent, that's not true. But as a general rule, the main thing about getting appointed to something important in the Trump administration is saying yes,
Yeah,
as loud as you
exactly.
can.
So I guess I'm hopeful for Rick Reeder based on your explanation, but I have to say the fact that he's taking the meeting and the fact that Trump really likes him for the job, it just naturally makes me skeptical. And I think that would be reasonable to most people. Rob, we'll have to have you back very soon. Thank you very much. Rob is the author of the Unhedged newsletter and co-host of the Unhedged podcast. Thanks for joining us, as always.
Thanks, guys.
We'll be right back. And if you're enjoying the show so far, be sure to like and subscribe to the Prof G Pod YouTube channel at the link below.
Support for the show comes from LinkedIn. It's a shame when the best B2B marketing gets wasted on the wrong audience. Like, imagine running an ad for cataract surgery on Saturday morning cartoons, or running a promo for this show on a video about Roblox or something. No offense to our Gen Alpha listeners, but that would be a waste of anyone's ad budget. So, when you want to reach the right professionals, you can use LinkedIn ads. LinkedIn has grown to a network of over 1 billion professionals and 130 million decision makers, according to their data. That's where it stands apart from other ad buys. You can target your buyers by job title, industry, company role, seniority, skills, company revenue, all so you can stop wasting budget on the wrong audience. That's why LinkedIn ads boast one of the highest B2B return on ad spend of all online ad networks. Seriously, all of them. Spend $250 on your first campaign on LinkedIn ads and get a free $250 credit for the next one. Just go to linkedin.com/Scott. That's linkedin.com/Scott. Terms and conditions apply.
We're back with Prof G Markets. TikTok's fate in America is finally settled. After years of legal battles, the US and China have approved a deal that sells TikTok's US business to a group of non-Chinese investors. Under the agreement, ByteDance's ownership will fall to 20% of the US business, with the remaining ownership spread across primarily American investors. Oracle, Silver Lake, and Abu Dhabi-based MGX will each take 15% stakes in the company. Okay, here to help us unpack the terms of this TikTok deal, we are joined by one of the reporters who actually broke the news, Reed Albergotti, technology editor at Semaphore. Reed, thank you for joining us on Prof G Markets.
Absolutely, good to be here.
So TikTok has closed the deal. It's official. You actually reported that this was going to close before it actually closed. I'd be interested to know how you got that scoop. But before we get there, what do we know about the deal? What are the terms? Where are we on TikTok?
Yeah, I mean, well, it's basically a joint venture, with Oracle and Silver Lake in the US. They're going to basically take over the US version of TikTok. I think the really interesting part, honestly, less than the business deal itself, is like what's going to happen with the algorithm in the US. And from what I understand, I mean, and this is something I reported on back in December, is that they're going to retrain the algorithm on US customers, and this way they'll be able to, Oracle will sort of administer this. They'll actually be able to tell if there's any manipulation from the Chinese government, essentially, on the algorithms. I thought that was sort of fascinating.
Yeah, I mean, the reason this is happening is there was a national security concern that dates back many, many years. The idea was to not have China influencing the algorithm, the TikTok algorithm that millions of Americans use. Have they solved that, actually? Like, do we know that this new TikTok is free of Chinese influence?
Well, I think this is actually the big question, right? I mean, we've gone through all of this, Congress, and now this huge complicated deal, which, the US and China had to sign off on. all for, essentially for China to still kind of have a hand on this, right? Now, if you talk to people at Oracle, they say, no, I mean, they literally are going to be able to oversee this and make sure that there's no manipulation. But I've seen, there's been chatter since December when this deal, was originally sort of came out, and most of the terms came out like a month ago, from critics who think that no, actually, unless there's a complete break between China and the U.S. version of TikTok, there's always some danger that there's going to be manipulation. Now, like the technical feasibility of that, or whether that's actually the case, I don't know. But I mean, to some extent, perception is reality, right? If people are worried about it, then I think it may continue to be a big question mark.
Just looking at the new owners, so we've got Oracle. It sounds like Oracle is really the one who's dealing with the technological side of the whole thing. We're interested to hear more about that. Also, Silver Lake, American investment firm, MGX, based out of Abu Dhabi. So that's not an American owner. I think some people would maybe say, well, why are we having non-Americans come in, these Middle Easterns come in and control the algorithm? What do you make of the ownership? Who's really in control here?
Yeah, I mean, that's another interest. I think that's going to definitely raise some questions. Now, if you've been following the Gulf region, which, Semaphore has, there have been a bunch of deals between U.S. tech companies and, MGX and G42 and other Abu Dhabi entities, UAE entities, really. So this has been what the Chinese relationship with the UAE has been this big sort of question mark around there. Should we even allow, for instance, NVIDIA chips to be shipped there? The U.S. government now, it's sort of under Trump has been a bit more open to dealing with those entities. But I think the question is like, well, how much are they, like you said, Oracle is actually going to be administering this on the technical side. So how much is this just a monetary investment? Do they actually have any influence? I think if you talk to Oracle, they'd say no. If someone from MGX calls us up and says, can you make a little tweak to the algorithm here? It's not like they have the power to do that. But again, these are just even just the original ownership, right, of ByteDance owning TikTok was enough. I mean, ByteDance always claimed that they were not manipulating the algorithm as well. So I think there's just always going to be some suspicion around TikTok and the algorithm, so to speak.
Yeah, I mean, this is an algorithm that has been wildly successful. I mean, just thinking back to when TikTok first came on the scene, it seemed as though there are all these potential social media companies that came and went, but no algorithm really cracked it. It was always basically Facebook that was the winner, or Instagram, whichever algorithm you were on. And then TikTok wins. It's been so successful for so long. It seems as though now it's about to change in a big way for the first time ever, which I think begs the question, like, how will it change? What will it do to the social media market? And one thing that we found kind of interesting is that on news of the deal closing, Meta stock jumped 1%. Now, maybe that's not large enough to attribute that this is because of the TikTok deal, but I'm certain that there's definitely a question that investors are asking, like, what does this actually mean for TikTok, the product? And perhaps could it be, worsening something that's already working very well? What do you think?
No, I don't think the algorithm itself is something that's a secret anymore. In other words, like, the technical aspect of it is not. I mean, everybody kind of, I think, knows how this works. There's not, there isn't at this point. I mean, look at just, frontier AI companies, right? I mean, it's hard to keep even that stuff secret. So I think everybody generally knows how this works. The thing is, what's valuable now in this, U.S. TikTok entity is the fact that they have all this data on the users. They know what people like already. So that's why Oracle can't just come in and say, we'll just like wipe this thing clean and we'll completely start over, develop, our, because they'd basically be starting from scratch. So you'd log on to TikTok and it wouldn't know anything about what you want to watch, and they'd have to start that process over again. So I think it's, it's not the algorithm now. It's just that there's all this institutional knowledge, I guess, and they need to find a way to retain that while also, making sure that there's no kind of like undue influence, behind the scenes.
All right. Reid Albergotti, technology editor at Semaphore. Reid, appreciate your time. Thank you.
Thanks for having me.
We'll be right back. And if you're enjoying the show so far, be sure to like and subscribe to the Prof G Pod YouTube channel at the link below. Support for this show comes from Delete Me. Now more than ever, it is essential to protect your data from data brokers. Delete Me makes it easy, quick, and safe to remove your personal data online at a time when surveillance and data breaches are common enough to make everyone vulnerable. And it's not a one-and-done service. Delete Me keeps working quietly in the background, continually monitoring and deleting the personal data that you don't want online. One of our producers uses Delete Me. She says that it was extremely easy and efficient to use. You don't have to keep updating and checking yourself. Sounds pretty great. You can take control of your data and keep your private life private by signing up for Delete Me. Now at a special discount for our listeners, get 20% off your Delete Me plan when you go to joindeleteme.com/profg and use promo code PROFG at checkout. The only way to get 20% off is to go to joindeleteme.com/profg and enter code PROFG at checkout. That's joindeleteme.com/profg, code PROFG. We're back with Prof G Markets. Well, it's quite telling that gold, the asset that is known across the world as the safe haven asset, the thing you buy when things are looking really bad, it's quite telling that that asset hit another record high this week. $5,000 per troy ounce, up more than 50% in the past 6 months, up more than 80% in the past 12 months. What that tells you is that investors are looking around, they're seeing what is happening, especially in America, and they're getting quite frightened. Whether that is our unsustainable fiscal deficit, which is set to explode again under Trump, or our escalating geopolitical tensions from Greenland to Venezuela to Iran, or even what is happening domestically. Most recently, armed federal agents raiding cities and shooting people in the middle of the street. All of this is working in tandem to make investors feel anxious, very anxious. And let's be real, they probably should be. We can talk about earnings and we can talk about profits, but when masked agents are on the ground shooting people in the head, suddenly the story changes a little bit. It's not about headwinds and tailwinds anymore. It becomes bigger than that. It becomes about violence. It becomes about democracy. It potentially becomes about war. And what do you do when you're worried about all of these things? What do you do when you're worried about the future of America? What do you do when you're worried about America's place in the world, perhaps a new global order? What do? You buy gold. Now, again, I'm not questioning the anxieties. Again, I think these anxieties are reasonable. However, I would question investors' conclusions. And in this case, the conclusion is that if America falls apart for whatever reason, if that happens, the answer to your problems is gold. And to that, I would ask the question, why? Why specifically? Because gold is a hard asset? Okay, well, there are lots of hard assets. Because gold is uncorrelated from the dollar? Okay, well, there are plenty of non-dollar denominated assets too. Or maybe because it is universally recognized as valuable, a store of value. Again, I could present to you a laundry list of other assets that fit the description. We could talk about many of the other metals that are more useful than gold. Metals like copper and lithium and aluminum. We could talk about other commodities as well. We could talk about food, oil. We could talk about maybe even Bitcoin. We could even talk about international stocks. If you think the US is going to shit for whatever reason, well, there are 194 other nations that you could invest in, many of which have far lower debt loads than the US. Countries like Norway or Denmark or Switzerland. And if you're a real doomer, you could just invest in weapons manufacturers and defense contractors. I'm not endorsing any of these, but my point is, when times get bad, there are plenty of things you could invest in besides gold. But the market doesn't seem to be fully recognizing that. It seems that gold is rallying not because of its intrinsic value, but because of a story that investors are instinctively telling themselves. When things look bad, this is what you do. You buy gold. Everyone knows that. That is not an investment thesis. That is a story. In fact, it is often the story of a bubble. A bubble is when the price of an asset becomes so untethered from its fundamentals that it no longer reflects its actual intrinsic value in the real world. Gold is supposedly almost twice as valuable today as it was 12 months ago. But again, why? And be specific. What can it do for you that it didn't do last year? How can it improve your life relative to anything else? What makes it such a safe haven? These are the questions that investors need to ask themselves very honestly. And saying it's worth it because everyone else says it's worth it isn't an answer. You have to have your own answer. It has to be a real, genuine answer. This is what investing is about. Now, to be clear, I think gold could rally tomorrow. I think it could rally the next day. I think it could keep rallying for the rest of the year. But at a certain point, you do have to start asking questions. And in every rally like this, and in every bubble, potentially like this, the most important question is also the simplest one. And that question is, why? Thanks for listening to Prof G Markets from Prof G Media. If you liked what you heard, subscribe to our YouTube channel and tune in tomorrow for more.